Every day we're getting closer to a major stock market crash or a financial crisis or both. And I think the only thing that might derail this in the short run, of course, nothing is going to derail it in the long run. This crisis is inevitable and will happen.
Welcome back to the Cash Baddie channel. As per Peter Schiff, every day, we're edging closer to a major stock market crash or financial crisis. In this video, I'm about to delve into the insights shared by Peter Schiff regarding the precarious state of the U.S. economy and the proactive measures he suggests to safeguard your financial well-being. Let's jump right in.
I have been warning about this not only in recent podcasts, but over the last several years, that this was going to happen, that interest rates were going to rise a lot more than the markets were prepared for.
Prominent economist and financial commentator Peter Schiff has long warned about rising interest rates, which are exceeding market expectations and persisting at elevated levels. This is evident in the current bond market, with yields reaching levels not seen since the 2008 financial crisis. Let's talk about Schiff's concerns about the looming economic crisis the United States is about to face. Well, don't worry, because he has also given a guide and a strategy for staying safe with your investment and finances. Firstly, Peter Schiff delivers a compelling message, stating that the United States stands on the brink of a significant financial crisis, with a substantial stock market crash looming in the future. He emphasizes that it's not a question of if, but when this crisis will materialize. Schiff connects this impending crisis to his consistent warnings about the surge in inflation, a consequence he attributes to the combination of low interest rate policies and extensive government spending. Secondly, Peter Schiff talks about the impact of rising interest rates, which is a crucial element of his economic analysis. He emphasizes several critical points. 1. Market disruption. Schiff anticipates a sharp increase in interest rates that could disrupt financial markets. Rising interest rates raise borrowing costs for both consumers and businesses, potentially leading to significant changes in investment and lending practices. 2. Bond market instability. Another concern is the potential collapse in bond prices as interest rates climb. This can result in significant losses for bondholders, particularly institutional investors and pension funds that rely on stable fixed income investments. 3. Impact on economic growth. Schiff argues that higher interest rates can hinder economic growth by increasing borrowing costs for businesses, potentially limiting their expansion and investment plans, which in turn could slow down economic activity and affect employment and consumer spending. 4. Long-term consequences. Schiff believes that not only will interest rates rise significantly, but they will remain elevated for an extended period, with lasting consequences for financial markets, lending practices, and the overall economic landscape. Lastly, Peter Schiff's concerns about the impending debt crisis are rooted in the unsustainable trajectory of the U.S. national debt.
Back in 2001, I think the national debt was 7-8 trillion. Now it's 33 trillion. We have a lot more debt now than we had back then. So this is a much bigger problem, a 5% 10-year. I mean, we're not there yet, but at the rate we're going, we will be there soon.
Peter Schiff points out a huge problem. The U.S. national debt has skyrocketed from about $7.8 trillion in 2001 to a staggering $33 trillion today. This is a major issue. Even though interest rates are low right now, we haven't yet seen the full consequences of all this debt. The problem is that the U.S. economy, including the government and individuals, has become very dependent on easy access to cheap money because of these low interest rates. This has led to a massive debt accumulation, like a time bomb waiting to explode. Schiff strongly believes that this growing national debt is unsustainable, and he criticizes how the government deals with it. He's warning that a debt crisis is looming, and it could have serious, devastating effects. However, Schiff doesn't just present problems, he also offers solutions. Now let's delve into Schiff's recommendations for navigating these turbulent times and safeguarding your financial future. Tip number 1. Invest in precious metals. Consider Peter Schiff's invaluable advice to invest in precious metals, specifically gold and silver, as a means of securing your financial future. Gold's historical significance as a store of value and medium of exchange, along with its resistance to inflation, positions it as a dependable hedge against economic instability and currency devaluation. This tip is grounded in the principle of diversification, enabling you to spread risk and protect your wealth during turbulent times. In an era marked by uncertain fiat currencies, Schiff's wisdom spotlights the enduring allure of precious metals. As economic uncertainties persist, more and more investors are turning to gold and silver to shield their assets and prepare for potential currency devaluation. Schiff's advice is your guiding light during these challenging financial times, underscoring the notion of gold as true money. Tip number 2. Peter Schiff emphasizes diversifying your investment portfolio. Spreading your investments across various asset classes, including stocks, bonds, real estate, and foreign investments, can help mitigate risks and enhance long-term stability. In an ever-changing financial landscape, diversification is a strategic shield against market volatility and economic uncertainties. Schiff's advice underscores the wisdom of not putting all your financial eggs in one basket, ultimately safeguarding your financial future by building a resilient and balanced investment portfolio.
They would have actually saved because they could have got interest on their savings. So we'd have more savings, we'd have less debt, we have a much healthier economy, we'd have a more productive economy. But because of what the Fed did, the economy's all screwed up.
Tip number 3. Peter Schiff encourages you to consider foreign investments as a strategic way to diversify and protect your wealth. By allocating some of your investments to foreign assets and currencies, you can reduce your vulnerability to U.S. economic uncertainties. This approach serves two primary purposes. It diversifies risk, reduces your reliance on the U.S. performance, and hedges against currency fluctuations, guarding against the dollar's depreciation. In essence, Schiff encourages a global perspective on your investments. While foreign investments involve complexities and risks, they enhance a well-rounded portfolio, providing stability and growth opportunities beyond U.S. economic conditions. Tip number 4. Prepare for higher interest rates. Peter Schiff's concerns about rising interest rates underscore the importance of proactive financial management. Start by assessing your existing debt and the potential impact of rising rates on repayments. Explore opportunities to refinance high-interest loans, potentially reducing your interest costs. Be cautious about new debt, particularly if it carries variable interest rates. Schiff's warning highlights the need to prepare for the challenges higher interest rates may bring, ensuring your financial stability in an evolving economic landscape.
I think that for most Americans, their standard of living is declining. I don't think the economy is really getting bigger. I think we're spending more and we're borrowing more and going deeper into debt. We're paying more for everything we buy.
Tip number 5. Peter Schiff is telling you to be cautious with debt, and his warning holds particular relevance in a landscape marked by a growing wealth gap and income inequality in the United States. As the cost of living rises and wages fail to keep pace, many households struggle to maintain their standard of living. His advice is clear: prioritize debt reduction, especially high-interest debt, to secure financial well-being. This prudent approach aligns with the broader economic concerns of the nation's growing debt crisis. It's a reminder that personal financial decisions significantly impact the overall economic health of the country. Lastly, the most important tip from Peter Schiff is to educate yourself. Schiff emphasizes the value of staying well-informed about economic trends and market dynamics. By educating yourself, you can gain a deep understanding of the forces in the financial world, enabling you to make informed decisions and adapt to changing circumstances. Remember that knowledge is a powerful tool to help you navigate uncertainties and protect your financial future. Peter Schiff's recommendations for safeguarding your financial future in 2023 and beyond reflect a prudent and diversified approach to financial planning. By investing in precious metals, diversifying your portfolio, considering foreign investments, and preparing for higher interest rates, you can better position yourself to weather economic storms. Moreover, reducing dependency on the US dollar and being cautious with debt are essential strategies to protect your financial well-being. Staying informed and educated about economic trends is a key element in successfully navigating the challenging economic landscape. After all, your financial well-being matters most, and we're here to guide you on that journey. Thank you for watching. Feel free to share your insights in the comment section below. Remember to hit the subscribe button to access additional informative content here on Cash Baggy channel, and stay tuned for my forthcoming videos.